what a pleasure it is to be opening this webinar, joint webinar by Taxsutra and IndusLaw. Post-budget session, riveting panel discussion is in store for all of us, and we've had record registrations. Why not? When we have legal luminaries, legal and tax luminaries on this panel, and a keynote to be headlined by none other than one of the foremost legal brains, legal Additional Solicitor General of this country, Mr. Venkataraman, Mr. Tarun Gulati, again a man who needs no introduction, one of the foremost tax lawyers in this country, tax and commercial lawyers, and Tarunji, Venkat sir have played such a big role in exposition of the tax law, in the evolution of the tax jurisprudence, the legal jurisprudence on taxation law over the last 3 decades or so. What a pleasure it is to be hosting two top-notch legal luminaries, and it's quite a privilege to be hosting them on this platform and panel. And of course, it's a pleasure to be partnering with IndusLaw, one of the top law firms, premier law firms in the country, a multi-specialty firm with diverse practice areas, 4 offices. It's among the top 10 law firms in the country, staff of over 300, over 50 partners, and their partners, Shashi and Ritesh, have joined us for the panel. They'll be leading the panel, in fact, and I hand it over to Ritesh to introduce our speakers. Shashi and Ritesh, a pleasure to be partnering with IndusLaw.
Thanks, Arun. Thank you for your introduction of us and and the panelists. Like you rightly said, between Mr. Gulati and Mr. Venkataraman, neither of them need any introductions. And for the sake of therefore formality, if I may, Mr. Venkataraman is the Additional Solicitor General of India. And before he took this office, he's a very reputed senior advocate, very popularly known for practicing tax laws. Some of us have learned quite a lot just reading the arguments he's presented in the courts, and his arguments alone could have been a textbook on various subjects that he's spoken on. So good evening, Mr. Venkataraman. A pleasure to have you here. Good evening. Similarly, Mr. Gulati, I can safely say I share a very student-like relationship with him. I've had the privilege of working with him for many years now, and he's such a kind-hearted person that even if we've had doubts on subjects we may not have briefed him directly, we've taken the liberty to call him and speak to him. So such a gem of a senior advocate. Again, his arguments on both direct and indirect tax laws. They themselves have they speak for themselves. And with those words, Mr. Gulati, good evening. Welcome to this panel. It's an absolute pleasure. And now, let me also introduce my co-panelist or co-moderator, Shashi Mathews. Yet another very dear friend of mine, worked together in our professional journey for a few years. Again, he's a partner with our tax practice at IndusLaw. He spearheads the litigation focus on the tax side at the firm, and comes with 14-15 years of experience in litigation. Began his career with ELP and moved into PDS Legal, and now I have the privilege of calling him my partner at IndusLaw. So welcome, Shashi. Welcome to the panel. Good evening.
Thanks, Ritesh.
So with that, introduction, I think nonetheless that let me also introduce the topic a little bit.
Before that, I can introduce Ritesh, because he's introducing everyone else. Ritesh heads the tax practice at IndusLaw. He comes with a rich experience in handling complex transaction structuring mandates for M&As, fund structuring, group reorganization, disposal of assets, and direct litigation matters. Do you get any sleep, Ritesh, I wonder?
I mean, you learn to sleep, sometimes with your eyes open. That's all I'll say in this It's been a remarkable journey of 14, 15 years, and now with IndusLaw. Thank you, Arun. Thank you for that kind introduction. So introducing the topic, I think is again yet another very formal job that I've been handed today, because we all know that in the last few days, the only thing staring at our faces as tax professionals is the union budget. In the 90-minute crisp pataka speech, as I call it, the finance minister has given us quite a few sleepless nights following that. The finance bill is as long as 200 plus pages. We've had a fairly elaborate and a self-speaking memorandum explaining the provisions. And that only speaks of the headline magnitude, the impact that this finance bill carries. Directionally on the economic, on the economic survey and the direction the country is taking in this budget, that seems to be rather promising, with focus on digital, government embracing digital more than anybody else, drones as a service, passports, digital banks, anything you speak of is now is now transitioning into the tech world. And on similar path-breaking reforms are also proposals to tax cryptocurrencies and virtual assets. So a bunch of key proposals, clarificatory amendments, a bunch of measures that the government has now taken. Some of them are I think we'll open them with we welcome them with more than open arms. Some of them we have a lot of questions on, and therefore we're lucky to have two very esteemed and very learned speakers today. With that, Arun, let me open the stage for you if you have any opening remarks, and then the most awaited keynote by Mr. Venkataraman for us. Thank you, Arun.
Venkat, the one thing I've learned is an ever optimist. It is pre-ASG avatar, we may have had several arguments on ideological matters, but he's an originalist, he is a constitutionalist, and he's an optimist. All three, and very persuasive as senior advocates are. So is Tarunji, and Tarunji writes a very famous column for us called Perspectives. So Venkat sir, I know for the last several years, when he makes an argument, it will be persuasive. So depending on whether he is going to defend or explain this budget provisions, it will be interesting. To set the context, 3 or 4 things. Coming off the pandemic, almost coming off the third wave now, did anyone think that the tax collections would be 15% more than the budget estimates? No. Did anyone think that the economic activity would pick up the way it did after the brutal second wave? No. Did anyone anticipate the sort of tax response, the tax policy response, right from slashing the corporate tax rate, the taxation laws ordinance, extending the due dates, being so taxpayer friendly in the last 24 months? No. So despite all my otherwise some contrarian sharp views, I think the tax policy response over the last 24 months to the pandemic has been nothing short of impressive. That is where I would like Venkat sir to maybe take over, because ultimately, when the world is grappling with COVID, with the sort of policy responses that should be there, this could have been make or break. The fact that the tax collections this year, we've posted a record GST collections in Jan, highest ever in 4 years. Incredible income tax collections, 6 lakh crore plus, both on personal and corporate income tax side, says it all. So from there, I request Venkat sir to take over. A budget in the midst of a bit of caution, third wave, but a lot of optimism as well. Over to you, Venkat sir. Can't thank you enough for this.
Namaste Sharade Devi Kashmira Puravasini Tvamakam Prati Nityam Vidyanam Chiti. Good evening to each one of you and my good friend Tarun, Shashi, Ritesh, and my best friend Arun. It's a pleasure always to speak on the podium of Taxsutra. No professional will miss that opportunity, so I didn't also want to miss that opportunity. I'm so happy, rather surprised at the good remarks, good conduct certificate issued by Arun about what is happening for the last 24 months in the tax front. I can tell you one thing, having worked with the government for the last 18, 19 months. See, the attitude matters a lot. The commitment matters a lot. And trying to be objective in ensuring that finally what is required is in place. These three objectives have been the mission in the last 20 months when it comes to tax policies. Plus or minus will always be there in any field. So this has been the objective, having been part of the governance and having worked with them in many areas. And being part of this law for over 3 decades, they also take our assistance and guidance very seriously. So since Arun wanted me to take it off from where we left, let me first talk about the Canon Amendment, which is something which we spent considerable time before we brought this amendment in this form and shape. It was not something, it was not a knee-jerk response. It was not done overnight. So much of deliberation, so much of discussion and perspectives from so many people, after which this has come into place. And let me tell you how it happened, so that the trade and the professionals will have an idea as to how this has finally formatted and designed. To say that we are no longer, future era will be in consonance with Canon. And what we have validated is very, very limited. So if you see the history of DRA from 1953, they are the ones who could do so much against anti-smuggling, anti-drugging, anti-any unacceptable legal activities. And slowly there in 1999, they started getting powers to, it went beyond investigative powers. And finally in 2011, that was the first judgment in Syed Ali, when they said customs, there are 3 wings. You have an official field formation, you have the customs preventive, and you have the DRA. So Syed Ali was the judgment which declared that customs preventive is not a proper office. This happened, say, in 2011. And between 2011 and 2015, circulars were issued, notifications were issued, empowering DRI and the preventive to be not only investigators, but also to issue notices and also to pass adjudication orders. And in 2015, they constituted both for DRI and to the DGCI, as it then stood, principal commissioners and officers under them. And they thought that what is being investigated by them should also be adjudicated by them. That was the concept in 2015. So, but this was challenged and the Bombay High Court went in favor of the revenue in Sunil Gupta's case. Whereas the Delhi High Court went against the revenue in Mangle Impex. And they said that this will be laying down a wrong path if you hand over such powers to investigative cells. That was the concern they expressed. So, but Mangle Impex and a batch of those matters went to the Supreme Court and the judgment was taken. And the Bombay High Court judgment went in assessee's favor, which went in revenue's favor when assessee filed an appeal that got dismissed. So this was the background position when Canon was heard. I want the trade and the professionals to understand the background. When Canon was heard, you had one judgment from Bombay, which went in favor of revenue and an SLP against it got dismissed. You had a judgment in Mangle Impex in favor of the assessee, but that was stayed. And this background was not fully brought to the notice of the court by either sides. So the court went on to lay down the law, saying that the customs officer, the DRI, is not a proper officer in terms of 17, 28, etc., etc., etc. And more importantly, they traced the source of power to Section 6, which in our very humble view may not be right. Because the expression used in Section 6 by the Parliament is entrustment. And if you see the scope of entrustment, you entrust something to somebody else who is not part of you. Police officials, Tahsildars. So officers who are outside the ambit of the customs law, you entrust powers. You don't entrust powers to your own, you only assign. The parliament used two expressions, assign and entrustment. This is the final distinction in law. However, the Supreme Court said you should have traced your power to Section 6. So it is in these circumstances, 15 years of show cause notice, you must understand the background. Just have, all of you are professionals, you can just have a small map in front of you, thought process, however strong and long it goes, 15 years of notices, 15 years of adjudication orders. What would be the fate of it based on canon? That was the question. So you had a judicial option, file a review, file a curative, file a fight. That's one way. The other way is to bring clarity to the law. So now, if you see this amendment in 2022, the bill which has been proposed, it is far, far distinct from the two earlier amendments, two earlier attempts. So it's holistic in generally. It voices there is a, instead of doing it under Section 6, because conceptually entrustment is something different from assignment, we have understood the ratio and respecting the ratio of canon, incorporated 4 subclasses to the new Section 5. Amended Section 3 by bringing in the preventive officers and the DRA officers to be part of customs officers. The first move is under 3. The second move is under Section 5. We introduce 1 Class A, 1 Class B, subsection 4, and subsection 5. 1 Class A allowing the board to assign powers and designate them as proper officers. 1 Class B allowing the principal commissioners to assign powers to officers below him in that jurisdiction. Then Class 4 assign the subjects, because we are now going, as he was saying, the e-growth. So we have an interfaces, technology is going so rapid. So we have incorporated those aspects also. You see 5, 6 classes are there. And finally, we have done 5, 5 also as an incorporation, because we may move to faceless assessment. All that is happening already. So 2 or more officers may exercise power concurrently. So all this has been brought into Section 5 basket. And we have introduced a new provision called 110AA. Respecting the canons ratio, for all pending proceedings and in all future proceedings, whether it is audit or investigation, DRI will only do investigation and not issue notices or adjudicate. That's something which is very defining. It's a parliamentary mandate which we have now brought, not through a circular, not through a notification. So if somebody is going to say canon has been disrespected, canon has been overthrown, it's all, see, you must read the full text before such a view is voiced. Canon is respected for what is pending. Canon is respected for the future path. And therefore, what is being validated is only the past actions. It's not that we wanted to jettison canon completely. So that's one message from the government perspective we wanted to convey to the trade and to our colleagues and to our professionals. So this is only limited to those past transactions which needs to be validated. And there was a lot of exchange of WhatsApp messages here and there that this is not a proper validation and all. All right, you can challenge if you want, but we can tell you, we can assure you, the concept of validation is threefold. What has the law? What is that the court has laid down as a law? 2, have you changed the basis of that law? And have you validated it retrospectively? This is the triple test laid down by the courts. And if you see the validation clause, it satisfies all the 3. We have recognized what has been said by the court. We have therefore drafted provisions to suit those to get over the basis of the judgment. And we have deemed them to be retrospective and therefore a validation thereafter. These are the steps which we have followed. And therefore to say this is not followed, all right, fine. views are definitely welcome, no doubt about it. But you should also understand the government's. This is one view we are able to convey to the trade and to the professionals officially. These are the steps we have ensured to take before this is brought into place. And you should therefore understand the time we would have taken to do this exercise. It's not knee-jerk, as some have suggested in the messages. So this is as far as canon is concerned. Now coming to GST. There are a lot of minor amendments, but one amendment is being talked much. And I would like to throw some clarity from the government's perspective on that amendment also. So all of you are concerned now, saying that what is all this? If the supplier logs in his Form 1 and his Form 3B, and if there's going to be a substantial difference between Form 1 and Form 3B, percentage, 20, 25, whatever is the percentage, then the recipient will be denied the credit. So you are going against all the judgments of the past, and you are throwing the burden on the recipient, on who is going to be the recipient. All of you are going to be blocked. All these concerns are now doing the rounds in the field. All right, welcome. But please understand the perspective of the government, why we brought it. A genuine taxpayer, a genuine supplier, and a genuine recipient is not going to have any problem. Somebody is going to pay taxes. Will he be unintelligent not to load it? Leave out the errors, which is marginal. This amendment is targeted against whom and who will cry horse? This amendment is targeted against people who issue fake transactions, conduct fake transactions. People who issue fake invoices, people who fudge records, people who commingle with the mainstream and make it murky. So you can say you can go on scouting people and then identify. All that is very easy. Every 1 month fellows change PAN. Every 15 days they change their GST registration. They migrate like fly-by-night operators. There is empirical data within us, within our system, for all this. So, and we were generous enough in the first 3 years, giving everybody who comes will be given that paid a heavy price. All of them had multiple, each one had 100 registrations. So we have to now bring in, you bring this, you bring that. Now regulations are in place for the past 1 year. So it is in this background, I would request the trade and my professional friends to understand, if this, a genuine, who is going to fight for this? I want to know how many genuine assessees are going to come and say this is unconstitutional. Let me know. I throw a challenge. People who are peddlers are going to now fight for this. Not for people. See, there may be error. I'm not ruling it out. There may be fringe cases. They're not ruling it out. But in a gateway which has, say, 1 crore taxpayers, imagine such a big gateway. So marginal error, plus or minus, we should also give it to the government. But the intention is to ensure fake guys just don't get away. And you must understand the volumes they make. It's very high. In this last 3-4 years, it is touching 40,000-45,000 crores and much more. It's under, you suddenly start an investigation, you first capture a first 100 crores. You thought this is the tip. You go back 300 crores. After 1 month of investigation, it goes 1,000 crores plus. It's so pandemic. So this is the background for the GST legislation on. So you have shifted the burden and all. Genuine transactions will not be affected. You wait and see, measure it for 3 months, and then say whether this amendment is workable or not. That's the second point as far as GST is concerned. Coming to income tax. I'll take another 6-7 minutes and then close it. Coming to income tax. There are a lot of things to say. For paucity of time, 3-4 important amendments have been brought, say, under Section 37 for the pharmaceutical industry. See, you say the doctors are excluded. The institutions who allow the doctors with lot of help, they are two sides of the same transaction. And you are asking us to do because you are getting judgments. So we have to necessarily interfere with that. Now, what is the second amendment in that cluster? Compounding. All of us know compounding is always for an offense. It's much worse than penalty. But you say no. So you bring a law because we debate on it. Third, penalty is domestic penalty not deductible. Okay, I get a penalty in a foreign land, so you should give me results. So these are the types of amendments which has been brought into 2020. I will just give you a feel as to what is being brought into place in these amendments. So, okay, there is a debate on 14, 2 views are possible on 14A. Fine, 2 views are possible there. I'll give some marks for you in case you have a voice to concern there. 170, it could have been worded better. We are also internally discussing about it. We may come back with some changes. We don't know. 170 could have been worded better. All right. We do agree. It's possible. So there is still time for us to redeem. We may do that also. But you must be very happy about one thing which you are all quite allergic and very concerned about, your 148 notices, and we have not touched it. It's a very bold initiative, a great giant step. Hopefully nothing happens between now and the act also. I'll leave you a word of caution, but still, it's so you must. I would request the trade and the professionals to understand that it was a decision taken at very high level after a lot of deliberations. That which way we should go. So this is one thing which all of you are bothered about. Sure, after faceless amendments, which has been carried out in some way. So this is one step we should bear it in mind. The government has surprised you, if you want to say so. This is at the income tax front. My last 3 minutes on cryptocurrency. I would only request all the professionals. We may not insist on the trade. They don't have time. They have to do business. But all the professionals, you must read the judgment authored by delivered by our Supreme Court on cryptocurrency. By bench, a very heavyweight bench comprising of Justice Nariman, as he then was, and Justice Ramasubramaniam, who is a creative judge, a very innovative and a passionate judge who has authored the judgment. So, see, cryptocurrency, there is so much of debate, and fortunately, there is an official version starting from the finance minister, from the revenue secretary, from the chairman CBDT, from the principal economic advisor. Everybody has spoken about it. So there is multiple views on the same subject, but with the same version. I'll just take it forward for just 2-3 minutes to just wrap it up. See, one thing, the status of this transaction today for the purpose of income tax is an asset. It's not a currency, because it has not gone through a national banking system or a regulatory system to be called as a currency. Its intrinsic value is known only to the parties who are interacting into the trade. So for something to become a currency, there is a lot of parameters, and the judgment explains it so beautifully. Number one. Number two, globally, this is being deliberated. Nobody has taken an assertive stand on one way or the other, because it's a touchy subject. So we can't be going ahead and take our own stand. This is a global transaction, and therefore all of us have to be aligned. And therefore this alignment is going to take time. Third, in spite of that, the reality is transactions are happening. So when a transaction is happening, why should we not impose a tax on it? That's the point. It's a bold step. Alignment has to happen, status has to be identified, recognition has to be made, all that is fine. So we are following a 2-step process, which I thought I should convey to all of you. First step, we are not looking at its legal recognition or its legal bar as a criteria for taxation, because it is immaterial. But at the second, so it is, we are not weighed by morals there. We are weighed by whether we can impose, we have the power to impose the tax legally, we are entitled to impose it. And we have therefore imposed it, both at the TDS stage and also at the tax stage, at 30% flat. Now, when it comes to the second stage, it's not moral, it is legal. Where when it comes to allowing deductions, allowing losses, allowing it carrying, we are not going to allow it. Because the legal status of the transaction is yet to be decided. So we have packaged this whole cryptocurrency into two parts. For the taxing part, we are not going by morals. We are going only by legal competence. But when it comes to allowances, we are weighed more by morals than by law. So this is the combination in which this amendment has been carried out. I thought I should clarify this from the government's perspective to my dear friends. So my 20 minutes, I started at 5:45, now it's 6:05. My 20 minutes is over. And when you have Tarun Bhai here, Shashi, Ritesh, youngsters are there to participate. It's time for them to also voice their views. I'm very happy to be part of this talk, part of Arun's Taxsutra journey. And I wish good success to all my friends. It's an opportunity to greet all of you, and may the best things happen. And we have turned around so quickly. I couldn't talk into the economic analysis for want of time. India is being respected the most. I can assure you that. I'll just leave one information. And there was a change in power in US in November 2019. 2020. The entire European Union decided to go and sign a very important agreement with our neighbor. And had it happened, it would have been a different effect for the US and a different effect for the rest of the democratic nations. Between January and June, 3 major international meetings happened. And India played a huge role. And the agreement did not get signed. And 27% of the migration business is coming to India. No press will report this. There will be no information anywhere, but these are facts. There are so many things that is happening at the domestic front, which may not have gained the visibility as it could have. It doesn't matter. Work will happen, progress will happen, changes will happen. And from speed business, world has started to understand safe business. That's the big transformation. And they look at our value system. They look at our standards. And therefore, the migration is towards safety. With these words, it's a pleasure to address this gathering. Take your best wishes. Namaste. Thank you, Anand.
So what a stellar keynote, that's covered so much ground in just 20 minutes. Canon judgment, section 37, 14A, 170, you held out some hope, and finally, virtual digital assets. The fine passing that you made, between what is legal and what is moral. What is moral is disallowed. And the other part, since the legality is not yet touched upon, we'll tax it. So wonderful exposition. Ritesh, you just want to really thank sir before we start the
Sure, Arun. So thank you, sir. Thank you for your views. As always, we get to learn a lot from you. Quite an interesting insight on the topics that you spoke of. And if I may, sir, and I'm aware that you're pressed for time on other commitments. But if I may, sir, take one opportunity to ask you for your reaction, and I recognize we purely personal reaction on this remarkable step that our government has now taken to end, circulating litigation, right? The provision under the Income Tax Act. The greedy professional in me wants to ask, why was this not done in GST? This is such a remarkable measure. This could have just been extended, right?
I can only say some good ideas conceived in one room of the North Block sometimes do not pass on to the other room in the dot plot. So that's all. You see, it's only, and I know why those limitations are there. See, budget preparation is an extremely secretive exercise and a very confidential exercise. Yeah, everybody is under oath, everybody is under surveillance. There's a lot of mechanism because it will become a breach of privilege otherwise.
Of course.
So sometimes it doesn't reach. Had it reached, well, maybe we could have picked it up also from there. But well, it's a good trend. So let us see that better late than never. It is getting replicated also here. Good thoughts can always find its seepage at some point of time.
So like I said, it's the greed, sir. It's just that greedy side of the professional saying, you're doing something good. Why not do it there? That's all, sir. Nothing else.
No. I wouldn't say it's. I'm happy that a youngster is flagging off this issue in a very dispassionate way. Welcome. That's a good sign of being a professional.
Thank you, sir. Thanks once again, sir. Many thanks for joining this Taxsutra and IndusLaw.
Thanks, Tarun, for your time.
Thank you so much, sir.
Thoroughly grateful for your time, sir.
I'll just listen to Tarun and then I'll
Sure,
just
sure.
listen, please.
Ritesh, could we request Tarunji to give his opening remarks?
Sir, Tarun sir, please.
You made
Now send to you.
all, and Venkat sir is also here making me nervous about saying things which are not going to be that palatable.
No, please. Be free.
No, I think the budget always is about opportunities, about what can be done and what can't, and what really ought to have been done. And the government is always in a very peculiar situation. If it does something, it is damned. If it doesn't do something, it is damned. So it's, as professionals, of course, who appear for the SSCs, as Venkat sir has also appeared for most of his life, we always feel that, okay, more should have been done. But those criticisms apart, I think the budget, as I see it, is on the tax front, there aren't too many things to talk about. There aren't too many things. There is a lot on the infrastructure side. There is a lot that the government, I think, and I think one full credit to the finance minister this time, that people were expecting that it is election time and there will be some measures of populism. She didn't budge at all. She didn't do anything on this. And therefore you have zero changes on tax rates, whether it's good or not. Venkat sir will not say it. I was hoping that for people like Venkat sir who have incomes of about 5 crores, 37% surcharge maybe could have looked at, but she didn't do anything at all, either for the middle class or for the top class of this, except for a slight tinkering of the surcharge on capital gains. I think she did nothing on this. And I think it takes a very bold person to do that, to actually not fall into populist measures. What I'm really not very happy about is a slew of these changes which come in the form of explanations or retrospective changes. And these are small tinkerings here and there. These are issues of, which go up to courts. You bring in a clarificatory amendment. After all, courts are there for a particular purpose. And these are minor amendments. Something as major as canon, which Venkat sir has explained, I have no quarrels about. I think it was going to come for the asking anyway. And I think Section 110 AA, which has been brought in, is a sign of maturity. There are huge problems of officers exercising multiple jurisdictions, and the manner in which this has been brought in to say that, yes, investigate you might, but then pass it on to the one person. Even if there are concurrent jurisdictions, you pass it on to one person, and that person the board will notify. That's the correct way forward, because SSCs cannot be subjected to multiple proceedings. Then, of course, there have been issues of crypto tax. These are early times, fresh provisions. As we go into the question answers, I think we will debate some of these issues. There, it's a very, very new concept in trade, first of all. Forget about taxation. And, a 30% tax on gross sale minus acquisition has been put in. Gifts have been taxed under Section 56. Let's see how this pans out. I think it's too early right now to comment on the right, wrong, or what it covers or what it doesn't really cover. Yes, and I agree with one thing, that whether it's legal or not legal is none of the concern as far as the taxing authority is concerned. That's absolutely fine. If you're earning income and if it is a then it can be taxed. What deductions you will get is another matter. And if the government has decided no indexation, no concessional rate of tax, I will tax it just as tax gambling or horse races or whatever else. It's government policy. They see it like that, so be it. I don't think that's an issue at all. Then there have been on the indirect tax, on the direct tax sides, a few changes, some charitable trusts. I think the taxation, there are a lot of changes which have been brought in. It's basically an attempt to tighten the leakages where people were misusing exemptions. There's a good change which has been brought in to say that if the application of income is not for the desired purpose, then only to that extent it will be disallowed. Earlier, in the earlier regime, and we've seen umpteen number of cases going up to the Supreme Court, that if there were allegations of this nature that you've misused or if you've not spent it for a charitable purpose, then the entire registration of the trust or the charitable institution could have been cancelled. So some of these changes are good. They are intelligent measures. They will bring down litigation. There are measures to cut down litigation like 158 AB, which Ritesh just mentioned. There, 158 AA was already there, where for the same SSC, if the case was pending in the Supreme Court or at the higher level, then you could have, then there was no need to file repeated appeals. Now here the question is that if somebody else's appeal is also pending, this can be done. But one very good point in this provision which I have found was that it's a consent-based provision. Unless the SSC consents, this is not going to happen because there are other repercussions. There are, the waiting period for some other litigation to get over could be very large. There could be interest implications. There could be implications of how you would want to distinguish a judgment because no two cases will be the same. Principle of law will be the same. So SSCs will also have to take a very, very careful decision whether to consent on this or not. Important part to also consider is that if you do consent, you are never going to get heard. Somebody else is going to get heard at a higher level, at a Supreme Court level, High Court level, and you've consented for that judgment to apply to you. If it were your own case, it's fine. But are you foreclosing your rights by consenting to this? These are very important questions. So as a provision, it's fine, but it's a consent-based provision. And I think careful decision-making will have to be made by SSCs before really giving that consent. Another very different provision which has been brought in to say that if for a TDS, for a payer, if he is making remittances outside India under 195 and the tax is borne by him, a refund provision will apply, meaning thereby that you make a deduction right now. In fact, in G, Supreme Court had said, one of the reasons why they said that 195.2 is a safeguard, and that was relying on the Transmission Corporation case of the Supreme Court. They said that after all, the deductor has no choice. The deductor has no recourse of a refund. There's no provision under the Act. And that's why 195.2 applications are very important. Now, by this, a refund provision has been created, and it has been said that an appeal under Section 248 will not lie. This, according to me, is a double-edged sword in some sense, that willy-nilly you will have to deduct, even if it is, if the payment is not liable to tax. You may have a right of refund, so you will not be able to argue in court to say that I am prejudiced. There's irreparable harm at this stage to me. Government will turn around and say that, well, you have a right of refund if it is not. So what's your problem? So these are provisions which have to be looked at, and I think one will have to see how to deal with situations like this. Then on the direct tax side, there are new penalty provisions which have been introduced: 271 A, B, A, C, A, E, in situations where CIT appeal is being empowered to levy penalty. I would think these are slightly drastic. Yes, CIT appeals always had the power of enhancement, but there was enough law of the Supreme Court to say that the CIT appeals could not traverse beyond the subject matter, could not go for a new source. Now, if the CIT appeals is empowered to even issue a penalty notice, I think it's going a bit far. We are looking at very serious consequences on these issues. Time will tell how these powers are utilized. We see more and more powers given to tax officers, both on the direct tax side and the indirect tax side. And we, as professionals who deal with clients on an everyday basis, see how some of those powers are exercised on a daily basis. So while the government is empowering it in the hope that they will exercise it with due diligence, on the ground, how it pans out, I think the SSCs know and the professionals who deal at the ground level know. So one has to be a little, as a tax professional, all I can say without sounding too critical here is that I'm circumspect. I'm slightly concerned about more and more powers which are being given. Coming on the indirect tax side, I think there are things which have been done, and there are things which need to be done urgently. I think one issue which bothers everybody is that the tribunal is still not constituted. I think that is a glaring, it's been 4 years of GST. Now, practically in every High Court, writs are being filed against first appellate authorities' orders. There are recurrent issues which arise, and I think something needs to be done. Venkat sir is here, and I think we will request him to take this grievance up urgently with the government and communicate to them that this cannot be deferred anymore.
Perfect.
And I think that was a very, very, I for one, at least hope that the budget will be a chance for the government to do something on this.
Sure.
It hasn't happened, but we are hoping that something will happen soon. Then secondly, I think, we have come to a level where now there are mandatory pre-deposits. It started with service tax. It started with excise. A lot of litigation has come down on that. The professionals are at a loss, but I think that's fine. As far as the SSCs are taken care of, I think in GST, when the mandatory provisions came in, I think the level of pre-deposits that have been put in, and they are cumulative. At the first appellate level, there is a pre-deposit. It's not taken into account at the second level. That's an additional pre-deposit at the second appellate level. The threshold, the ceilings have been put extremely high in GST. I think if there is no choice, so the crooks, so-called fake invoice people, of course, should be paying full pre-deposits, according to me. Those are not the people that should be given concessions. But there are in litigation, and Venkat sir will agree, in litigation, we see that not every litigation is about those people. There are genuine tax disputes. And if you require mandatorily people to pay such high pre-deposits, I think it's a bit unfair. And I think something ought to have been done there. Third point, which I thought, and I'm saying what could have been done first before going into what has been done. And
So you want, maybe after this point, could we get Ritesh and Shashi in so that they can put some questions to you, because we have a panel.
No, questions will come. Questions will come. Just give me 2-3 minutes. We don't have Venkat sir for long. So I want to just put 2-3 points, very important, so that because he is the person who can make a change, or who can at least communicate something from our side to the government, and it's very important. The nitty-gritties of these changes we will debate amongst ourselves. We don't need learned ASG to spend time on those issues. I think his time is very valuable, and let's talk about the things that bother us, where we can put our perspective across to him. Just, it won't take more than 5 minutes. I think I'll be done in 5 minutes on this, because we have his attention. I think it's important to raise it.
Sir, by all means, sir. The panel is anyways expected to be a short panel, Tarun sir.
Yeah.
So please feel free. So Arun, that's fine. We're okay with that. Let's not.
Yeah. So the third thing I think, which bothers me in the GST legislation, is the structure of the ARs and the appellate authority, all manned by revenue officers. It's an extremely important forum, and it can lead to real avoidance of litigation. If you see the trend of the ARs, 95+% of the ARs are in favor of the revenue. And it's a meaningless exercise. As professional, if somebody asks me, if a client comes to me, should I go for an AR? My answer is no. Why should the government not have an independent body where this forum can actually be utilized, and it can be an effective means of actually avoiding disputes? Tax compliant SSCs want to be compliant, but if there are genuine issues of interpretation, why should they not get a fair chance without really engaging with the government in litigation? Why have a structure like this which does not inspire confidence? That is third point. The fourth point, I think, which ought to be dealt with, cryptos is here to stay, it seems. The direct side, tax side, the government has actually put in a provision. It will be tested, it will be implemented, there will be issues. I think we also need some clarity on the indirect tax side.
And they should have put GST also.
Yeah, it will be put. There will be disputes. We will be there. You will be there in those disputes. But I think a statutory framework ought to have been put. So these are the 4 points which I thought, which, ought to be there. It's something ought to have been done on it. I have one very sticky point to talk about, where Venkat sir and I can never be on the same plane. And that is on credits, on ITC. And the way I look at it is, and I know the government's perspective, I know the government's concerns on fake invoicing, but I think a lot of people who are genuine are also being impacted by these kind of provisions. Ultimately, we are in a position where a recipient is paying the tax to the vendor. And it may not, let's forget about the fake invoicing cases. I think nobody has any sympathy for them. Neither I as a professional, nor of course the government will never have sympathy and should not have sympathy. And we don't even, shed tears for this kind of people. What we are worried about is genuine corporates who are tax compliant. For no default of theirs, they are facing problems. Somebody defaults in filing his return, or even if it's an error, I get impacted. I say that if you do have a recourse against the person who's defaulting. You have it. It's not as if you have taken that away. You want the easy way out by catching the recipient. I say that if you do want to place the onus on the recipient, please make all payment of tax on reverse charge. I will pay it to the government and I will take the credit. I have no difficulty. Make it like a purchase tax. I should pay the tax directly to the government and should be able to avail the tax credit. If I have genuinely paid the tax to the government, to my vendor for him to deposit, and it is not within my realm, it is not within my power to ensure that he complies, why should I suffer doubly? Why should I suffer doubly? It's a big problem. And I don't take away anything from what the government feels on fake invoicing. In the first few years of GST, many people have taken undue advantage of the electronic system, about the registration and all of those, and those guys should be penalized. I have no doubt in my mind on that. But look at so many cases which are pending of genuine SSCs who are suffering because of this. It's not fair. And well, fairness is one thing. I think in courts, the debate go on a slightly different angle. The second part that Venkat sir raised on canon, I think it had to come. It was for the asking. I think that was a no-brainer that those amendments would have been brought in. There are some very good points in this on the GST, transfer of cash balances. From if the PAN of the company is the same, you can transfer it from one registration to the other. Very good point. Not so good point, introduction of section 4912, where the power has been given for limiting the amount that you can use as ITC to pay your output liability. I think can be misused, and we are losing sight of what is credit, that something that I have already paid to the government. You want me to hold that credit and not use it? I think it's again, in a case of misuse, I can understand you can use those powers, but to give blanket powers like this to say that I will put a cap on the amount of ITC that you can use to pay your output liability, personally, it's not palatable. There are issues in relation to interest with amendment to section 50 subsection 3 of the CGST Act. Good amendment. Availment and utilization, only then interest. Rate of interest coming down from 24 to 18%. Very good amendment. 24 was, I think it appeared to be a bit of a confiscatory kind of a interest rate. This is good. Some good amendments in terms of extension of dates from September to November. People are struggling because of several reasons. I think those are good amendments. Refund from 6 months to 2 years. Again, good. But to say that for every refund under 54, you will have to now file an application and a return will not act like a refund is, I think, there is a likelihood of some litigation there. And so those are broad comments on the indirect tax side. There are, of course, customs related provisions which have been brought in. Section 14 amendments to say that additional requirements can be put in on a class of SSCs to disclose. Again, as an SSCs counsel, I feel that the onus on, and we're talking about here valuation, if there are allegations of undervaluation, the onus was on the person who alleges undervaluation, and you're putting more and more onus on the SSC side. One general comment otherwise is that the manner in which our tax laws are being implemented, the kind of aggression that we are seeing from the tax officer, including so many arrests, and sometimes for very valid reasons, all those that Venkat sir points out, quite often in court also on fake invoicing, etc., where the government is being literally swindled. I have no quarrel that those cases should be punished, but there are many other cases where we deal with it on an everyday basis. that where SSCs on pure interpretational issues, when they step into the office of the investigator, he is an investigator, he is an adjudicator, and he is somebody who can record evidence under section 70. If you go before a police officer under CRPC, records a statement under 161, he knows that there is very limited applicability of that. He cannot take liberties. This officer, he knows he has police powers. There are non-cognizable offenses which are there. He has police powers. He has investigative powers. He has adjudicatory powers. You have rolled everything into one. When you empower an officer with such wide powers, don't expect every officer to behave with maturity and with diligence. The government also must safeguard the SSC who is compliant, and if there is a possibility of abuse of such wide powers, it must be tackled in my view. These are my very respectful suggestions. And I'll leave it to the panel now to discuss separate things. If Venkat sir can stay, it will be great. But if he's short of time, we'll do our small nitty-gritty on the several provisions which have come in.
Thanks a lot, Tarun, and I'll carry your sentiments to the best of our abilities and see. On appellate front, we have been working. There are certain constraints. It will take some time, but it is also bothering the government. I should say that. See, I think it's like this: when you write the book and your last few pages and chapters gets boring. I think when they started writing GST, when they came to appellate mechanism, they felt it boring and they left it there. That's what I used to say. But it's important. It's critical. You can't run a law without an appellate mechanism. It's very clear. We'll see what best we can do. Certainly, we'll carry your sentiments and to see how much we can translate.
Thank you. Thank you.
It's a pleasure listening to you. And I'll try to stay as much as possible. Don't worry. Thank you so much.
On behalf of all of us here and on behalf of IndusLaw, we would really like to thank you for your time that you've given us and your views here. Just wanted to put that out. So thank you so much.
And Tarun, thanks a lot. Honestly, I wasn't expecting on what could be done. But that's another, that's a very different dimension for us to sort of now start thinking. But sir, you touched upon crypto, and I think generally we all agreed that there should have been something on the GST part. Now, one thing in the in the crypto tax provisions, or rather two things, but let me begin with the one that links to GST. Is in the withholding tax provisions under 194S, the proposed 194S, there is an exclusion that is being carved out for when 194O will not apply when 194S applies. So to say that if, and 194O deals with TDS on sale of goods and services. So the section expressly calls out that you do not need to withhold as goods or services if you withhold under 194 as crypto. Now, I know, this may not be very directly relevant, but what kind of a shadow does this cast on the classification of crypto from a GST perspective?
No problem at all.
No shadow at all.
Yeah, no shadow. See, you can use, one is taxed as an asset, another is taxed as a supply of goods. For GST, it is supply that matters. You can supply an asset, you can supply goods also. So there is no overlap. There is no confusion there in case they want to tax.
No, and I think that mutual exclusivity of two sections is important to specify anyway. There have been board circulars even on remittances to say that if something is being taxed as salaries under 192, you can't tax it under 194J as professional services, something like that. So if you have created two separate classes in a legislation, capital asset is separate, right? Crypto is being treated as a separate class, whether it's treated as a stock in trade or an asset. All those are debates which will go on, I think. But once you have treated this as a separate item of taxation, and you have calculation, tax calculation is separate, then you have to provide for a separate mechanism for deduction of tax. Of course, there are quite a few issues as to who's the payer when you're dealing on an exchange.
Correct.
What amounts to a transfer? There are many such issues which will come up because this is not a capital asset, and transfer under the Income Tax Act under Section 2, subsection 47 is in relation to a capital asset.
Capital asset. Yes.
And while the section talks about transfer of crypto or digital assets, the word transfer is not defined. There are quite a few other issues which comes immediately spring to mind, like they are trying to tax even a non-monetary consideration here. If there is indeed non-monetary consideration, how do you value it? There are no machinery provisions yet. Maybe they will come. So there are issues relating to this which will evolve with practice, I think, and with more clarity coming in when the rules are notified, if they are at all notified. Early days today, one thing which I have not been able to understand, the withholding provision applies from 1st of July 22. But the substantive part of the provision which taxes cryptos applies only from the assessment year 23-24 onwards,
Right.
from 1st April. So there is a bit of a, so what happens in the interregnum, what happens now, what happens after 1st July, and what happens from 1st April of 23. So that at least I have not been able to figure out the hiatus between these dates. So one will have to see how this taxation actually pans out.
In fact, sir, on that note, earlier this morning, I had the benefit of interacting with Mr. Kamlesh Varshne. We did point out this particular issue to him. It looked more like some kind of a drafting error of sorts, but I don't think the government intended to give some kind of a 1-year break before the taxing provisions really kick in. But anyways, I think that's one point fair, and like you said. So the other thing, moving on from here is, the amendment that we all also spoke of when it comes to Section 170. Clearly it looks like the amendment runs contradictory, in some sense contradictory, it may not be fully, to the decision of the Supreme Court in the Maruti Suzuki ruling, where they say that if an assessment is being carried out when there is a business reorganization which is underway, the fact that pursuant to the business reorganization, the assessment order is passed on an entity which ceases to exist, now the deeming fiction is that the assessment would have deemed to be done on the successor entity.
Successor will be bound by it.
Successor bound by it, yeah. Your views on that, Tarun sir?
Well, definitely it is to get over the Supreme Court judgment. Where is the doubt? And honestly, in an amalgamation, do you expect that if an assessment is made on the other entity, it should be a toothless assessment which cannot be enforced against the resultant entity? This is a justifiable amendment according to me, but also mind you that this is a prospective amendment to my knowledge. It's not a retrospective amendment. So, and one thing generally I must say, that as far as these amendments are concerned, many of them have come by way of explanations. Many of these amendments have used the language for removal of doubts, but they don't become retrospective just because they say that we are bringing in an explanation. They don't become retrospective just because they say that we are using language for removal of doubts, and this was always to be supposed to be the intent. The Supreme Court in Martin Lottery's case has clearly said that just because the language is for removal of doubts does not make it retrospective. And one thing which is very clear, in the same bill, you see 5 amendments which are clearly retrospective. There are another 10 which says for removal of doubts or which are adding explanations. They are not retrospective. But this will cause a lot of dispute, because apart from being expressly retrospective, one argument which will be open to the revenue to canvass, that it might not be retrospective, but it is merely clarificatory. That's the gray area. But I think SSCs have enough grounds to argue as well to say that you can't apply it for the past.
So on this note, when you're speaking of these retrospective clarificatory amendments, like you said, there are a bunch of 5, and 2 particularly call for some concern. The amendment to what will qualify as tax under section 40 for the purpose of tax deductions, and second is the clarificatory explanation to section 37. Both of these again seem to be quite again on the same path, overruling some decisions of the court, and again perhaps retrospective in the way in which they can apply.
Yeah, I think that is what I said, which I don't like. It's a very micro kind of a policy intervention, that every time that the revenue loses, you come out with a amendment like this to overrule a court judgment. Not something that should have been done. Again, 40 A2, there are judgments to say that cesses and surcharges will not be taxed. May be right, may be wrong. But anyway, you can't bring it retrospectively. Whatever, you have to respect the courts and at least get on with it. But one would have thought that this is the general trend that will be followed. In fact, I think in 2014, when the Modi government came in, I think everybody expected that the days of retrospective legislation is gone, but doesn't seem, and these are not very big issues. I can understand that where there is a large impact, like a canon kind of issue, I think justifiable. Even as an SSC's counsel, I feel that the government necessarily had to bring that amendment in. But these are not that huge, issues. These are one case here, one case there. Why should you get in a retrospective? Even if you want to amend the law, please amend it for all, but don't amend it retrospectively. And I think one thing Venkat sir explained on validation. Yes, Parliament's powers are very wide on validation. If the Parliament were to remove the defect which a court has pointed out, they can validate. And they can validate prospectively and they can validate retrospectively. There's no doubt about that. But just because you have the power, should you do it is the question. So it's more of a question whether you want to support trade, whether you want to respect the judiciary, rather than I have the power, I'll do it.
And I can't stop myself but give you another instance of this particular discussion. Of course, the flip side of it is to say that, look, isn't the government actually being proactive here? Because, wherever they feel there is litigation, be it at the High Court or at the ITAT level, there is a corrective measure introduced ASAP from the point of view of tax certainty. I wouldn't want to name or give references to the officer who took this view, but it was at some point quite a contrast to how we look at things. A couple of questions on his mind. Shashi, do you want to take over?
Yeah, just before Shashi gets into his indirect tax issues, I must say one thing on 37 amendments, that they are clearly targeted to, again, there are judgments to say that if expenditures are wholly and exclusively incurred for the purpose of business, like medical professionals, supposing pharma companies are giving some freebies. Yes, there are Indian Medical Council professional conduct, etiquette and ethics regulations which are in place. But by making this kind of an amendment, are we asking the assessing officer to sit in judgment on what is a violation of those regulations? In the absence of the Medical Council of India taking any action against the pharma company, are we authorizing a tax officer to deal with something like this? This is where my concern lies. And this is not just medical. I can say that in very many businesses, there will be occasions where the assessing officer will say that according to me, what you have done is not legal. Let's talk about, advertising which takes place. A cigarette company advertising for bravery awards. A liquor company advertising on soda or advertising a CD. Assessing officer says that advertising under your parent legislation is not legal. I disallow this. Where are we going with this?
And in the liquor industry, we've seen that issue, right? We've seen that issue already come up.
All I'm saying is that, yes, and today we are losing sight of where all of this started. When the first time the Supreme Court ruled on that that the government has a right to tax even illegal income, they also said that you are entitled to claim expenditure for that, because after all, the Income Tax Act is on net income. Yara Singh, which case Supreme Court, which applied the principle laid down in Badridas Daga, clearly said, after all, the Income Tax Act applies on net income. So if somebody is a gambler and he's expended some costs, you are entitled to deduct them. Now here again, if I am expending something for my business, quite clearly that's going to enhance my turnover and my profit on which I'm paying tax. Why should you disallow expense? Anyway, so those are things which I think will be debated in courts in due course of time.
In fact, I wanted to ask you this question only and not before going to indirect tax, but you've answered it. But one point I wanted to make, sir, we've in fact seen in the past between customs officers and DGFT, where customs was issuing a show cause notice without DGFT having cancelled the license. This is akin to that only.
Absolutely.
There the courts have said that if the licensing authority hasn't cancelled it, who are you to issue a show cause notice?
Those kind of judgments are there in every realm of tax law. They are there in income tax. There are issues where a gratuity certificate is issued. Assessing officer says gratuity deduction will not be given to the company. Courts have said that predicate certificate not having been cancelled, you can't make a disallowance. They are there in sales tax judgments. They are there in excise. There are judgments in every realm of tax law that I know of on this issue.
Right. So just before we go into ITT, just have one more question on direct tax itself. Coming from the notional part. So on 43B, what are your views, sir? Because 43B, so this is on the conversion of interest payable on an existing loan into a debenture. So this, we feel it's been brought in to take overrule an earlier Supreme Court judgment on this issue only.
Absolutely.
But does it really take away the essence of what the Supreme Court judgment had said in MMAPA?
You see, the question is 43B applies when an actual payment is made. Now, if you are, and we are talking here of interest, so there is a company which is beleaguered. It has no funds to pay the interest. Instead of paying it, it converts it into a principal sum.
Yes.
My mind says that insofar as the interest liability is concerned, that has got extinguished. It's become a principal amount of debt. It amounts to a deemed payment. What else is it? So this amendment again tries to overrule that judgment in some way. And we'll see, it will be tested in courts.
Right, sir. So now on the indirect tax side, we've in fact spoken a lot on both sides on the proper officer, so I won't bother you with that question. And I think the amendments to the tariff and making the tariff an easier read for everyone in the general public is also going to be something that the government is going to call ease of doing business now. But one thing, sir, it really disturbs me is the amendment to section, rather the introduction of section 135AA, sir, which is on the customs side, where publication of import and export related data is now being punishable by way of imprisonment or fine. As a practitioner, sir, there is especially in special valuation branch, I would have used this data. But what are your views on this, sir? What is the impact really on valuation?
The purported reason for bringing in this provision is data privacy. But I don't know how, it seems rather drastic to me. You are talking about the special valuation branch for customs. I am saying that insofar as the transfer pricing legislation is concerned on the direct tax side, publicly available data is important for them to benchmark. Although, one will have to see, this is here what we are talking about is transaction-wise data, which may be sensitive. Now, the question is if somebody legitimately gets it, and what amounts to publication? This provision talks about publication so that it is disseminated to the public. Today, if you are a man of trade, I am a man of trade, I have imported something, and you are able to get my bill of entry to establish that there is a contemporaneous import at a particular value, I don't think that amounts to publication, which is dissemination to the public. I don't think you'll be hit by that. It's only if you were to publish unauthorized data, I would think.
That is the real concern.
That is where I think the provision will hit.
Right. And in fact, that was something that we were really concerned about because there are a lot of companies and softwares which give this data.
I don't know why we are doing this because, I think a proper data privacy legislation is a long time coming in India. It should have been at least a decade back. Yeah. I think instead of doing this patchwork, I think we need a proper data privacy legislation.
Yeah. So now, before we go into GST, one interesting thing on the advanced ruling amendments in 28J, where it's been limited to 3 years. So what are your views on that? Because that whole perspective of change in law, in fact, is now...
I think, again, an amendment where I don't really understand the logic of it. Why should you make an advanced ruling of limited life? Unless facts or law have changed. If facts and law have changed anyway, it's not binding, right? Now you make it 3 years. Are we doing away with the principle of consistency? Are we forgetting what Supreme Court had said in Radhaswamy Satsang to say that while res judicata may not apply in tax laws, principle of consistency still applies. So what is going to happen now? If the life is 3 years and there is no change in fact or in law, the SSC will be driven to another advanced ruling. What's the point? Yeah. Or can the assessing officer just change his view? The advanced ruling has lapsed, now I'm changing my view. Will that view stick in court? Answer is no. So it's quite a meaningless amendment according to me.
That's really helpful, sir. So one thing that we've seen as a trend in some of these amendments that have been proposed in GST, especially where an exemption is being given with retrospective effect. There are clauses like, in fact, we've seen that on the refund of GST on government fees for the alcoholic industry. There the issue, the provision says that no refund shall be granted for the past. Where do we stand there, sir? Because that is a very peculiar situation for us.
See, unfortunately, so this is basically giving premium to the dishonest person. A person who had paid it but was still litigating it loses here. A person who has not paid it gets the advantage of the retrospective amendment which is coming in favor of the SSC. So it is really granting a premium to the person who was non-compliant and who didn't pay it. And the person who's paid it is going to suffer. But what about SVLDRS? Under SVLDRS, the person who has paid it gets no refund if he's paid it in excess of the tax relief that he would have been entitled to if he had not paid it. Again, the same thing. So there have been cases where similar provisions, to my knowledge, have been upheld. It's unfortunate. It's not good for the SSC, but that's the way it is.
Yeah, in fact, we were just trying to see if there was a middle path that one could take and still go and file for a refund. But I think, as you rightly pointed in the past, also
It will, if at all a refund will have to be filed, first you'll have to go challenge this provision and wait.
that's the
only way out.
Yeah. But so where assessees have already filed refund applications in this for that intervening period between 17 to 19, this amendment had come by way of notification 19, this exemption. What happens to those cases, sir? How do you think will the court look at it now? Now that this amendment has come, if somebody has already filed a refund application, what happens to those cases now? We are looking at
until this provision is challenged and is struck down, you won't get a refund.
Right. Very helpful, sir. So you've in fact given us a lot of information and on the ITC mechanism that GST originally how it was, and so I won't bother you with that, sir. I think broadly we are at the end of our questions, but sir, if you want to, is there anything that you would like to tell us on the ITC bit, the changes to 1638-41? We've taken away the whole two-way communication that is there, so
it was
that's
never
been diluted now.
The provisions were notified, but it was never implemented. It was neither practical. It was over aspirational, I thought, and in fact ought not have been done in the first place. It's just not practical. You can't have this two-way communication happening in the span of 5 days, 10 days, matching happening, and then people reconciling their returns. It's impossible. So it was an over, and that's been done away with. It's fine. My problem, which I said in my early remarks today, is that putting an extra burden on the recipient is something which is not good. Many writs are pending which have challenged the provisions of 16(2)(c), etc. earlier. I think these provisions will also be challenged. Either those writs will be amended or fresh writs will be.
Because sir, this seems to be more onerous than what was there before.
It is.
I have to now build in safeguards.
And it is unfair.
Just one last topic, sir, if you permit me, before we conclude. And I promise I won't.
Because we are at 7 o'clock. I think
just one last thing is on is on the director's liability. While what is done in this finance bill is only deletion of the margin heading, but any quick views on section 179, sir?
See, 179, yes. So the deletion is only to the marginal heading. This change in the section that it does not apply just to companies in liquidation had come in 1975, not now. For some reason, I think the people who draft were wearing blinkers and they didn't see the change, that the change didn't get carried out in the heading, which has now got carried out. This does not create any new liabilities for directors. And this section 179 is not like other provisions of other laws where a director who is solely in charge of the affairs of the company becomes liable. It's a very different section. This section applies, first of all, only in situations where the company fails to pay the tax. So it's not as if the department can approach a director of a private limited company straight away. Second, it applies to all directors, whether they are in the thick of the business or not. But it allows a caveat and a defense to the director to say that if he can prove that the non-recovery from the company, very important, it's not that there is a violation by the company, the non-recovery of the tax by the company is not on account of his negligence, malfeasance, etc. Only then. So it's a very different section. So don't go under the impression like what you have vicarious liabilities on directors generally in other laws, negotiable instruments, FEMA, PMLA, EST. That is not this kind of a provision. This is very different.
Sure, sir. Sure. I think, any time on this subject, and especially with experts like you, is going to be little time. We have a bundle of questions, more controversial topics like 194R, etc. But I'm continuously being prompted that you've crossed your defined threshold. So with that, to our dear listeners and our audience, unfortunately, we are not able to take any questions because of paucity of time. But please do write in to us or to the Taxsutra team. We will collate and try and respond to as much as we can. And with that note, Tarun sir, thanks a lot for your time. Venkat sir, of course, left the meeting a few minutes ago. But nonetheless, we want to thank him also for the time and the benefit of his knowledge that he shared with us. Thank you both of you. Thank you, Shashi.
Thank you for IndusLaw as well as Taxsutra for inviting me. It's always a pleasure to be part of such panels. They are educative and it's a two-way exercise. We learn from these. Thank you so much.
Thank you so much, sir. Thank you.
Thank you to the Taxsutra team. They've done quite a bit of a hard work in putting all of this together. Thank you guys. Thank you for putting all of this together for us. Thank you all. Have a good evening ahead.